PayPal is down 81% from its all-time high, and it's down 22% year to date. Now, full disclosure, I own PayPal. I'm building a position. Do not buy PayPal or any company because I do or anybody else on the internet does. My goals are different than yours. My situation is different than mine. I've done different research. However, I'm here to teach a process on this channel. So in this video, we're going to go over some high-level metrics on PayPal. We're going to cover the 8 pillars. We're going to go over some bull and bear cases from our community members. We're going to sit there and look at some analyst estimates, but we're going to finish it off with probably the most important question you're asking, which is, what's the right price to pay for PayPal? Now, we're going to make assumptions about the future. But in this video, there's something here for beginners all the way to more advanced investors. So no matter where you are between those two, there's something for everyone. Just stick along. The further we go into the video, the better it gets. So let's stick with it. Guys, let's go check out PayPal. $64 billion market cap after falling 81% from its all-time high of 310 on July 26, 2021. Now remember, guys, this 310 number means nothing. What matters is the market cap, okay? So the company did $28 billion in the last year in revenue, profit of $4 billion, and the average over the last 5 years they've made is 3.2. Now, one thing I like here is their 5-year average free cash flow is $5 billion, which is significantly higher than their 5-year average net income. Usually it's the other way around, so I like this a lot. Its current PE is 15.8. Current gross margin, 48%. So what does that mean? It means that for every extra dollar they bring in sales today, 48 cents of it can go to the bottom line to pay their taxes and all that stuff. It's basically their pre-tax net income. That's awesome. That's a big, big number, all right? Compared to a company like Amazon, which is like 15%. Compared to a company like Walmart, which is 25%. These are really large numbers, and I love that. All right? No dividend, which makes sense. Their 5-year return on invested capital is 9.6, and last year was 11.2. So the average in the market's 9 to 10%. So this isn't something to write home about, but they're still a growing business, and they're building the thing I like about PayPal so much is they're considered safe. All right? Whenever I want to buy anything that I want safety with, I go with PayPal. That's what I always do. So that's right there a very big benefit. All right. So let's go check out the 8 pillars on PayPal real quick. Now, guys, if you're part of our community, you can customize the 8 pillars up to 12 different pillars. So just remember that here as you're doing this. But it has everything is a check except for their free cash flow growth. Their cash flow is about $3.5 billion lower in the last 12 months. And that's a pretty alarming number considering their net income is up $1.6 billion. So I'm going to go to their cash flow statement and take a gander at it real quick. All right, so it looks like 5 years ago they had an anomaly, $7.2 billion free cash flow. Okay, now there's still lower free cash flow here than past years. So the question is this a trend? Is PayPal declining as a business? Well, let's look at their earnings. Let's look at their revenue by quarter. In their June quarter, they did $7.3 billion in revenue. In the June of last year, they did 6.8. Well, that doesn't really look at declining. Okay, in the March quarter, 7.04 versus 6.48. 7.38 versus 6.92. 6.85 versus 6.18. Guys, it's growing. Now, it's not growing the way it used to, but that's why we always encourage people to be cautious when stocks are flying high and selling for expensive multiples. This company was selling for, what is that, 70, 80 times profit at its all-time high, maybe even more. And we were probably saying, go back and look at our videos. I'm sure we were saying, be cautious here. And now here I am, hoping the stock goes down. And I fully expect the stock to go down. You know why? Because when you buy a company, you're never going to buy it at the bottom. Don't expect to buy it at the bottom. Any given day, any given week, any given month, it's a crapshoot what's going to happen. What we're here to do is to teach a process that allows you to take out all the short-term noise and focus on the long run. What's this company going to look like in the future? All right, let's go check out some, they just got a new CEO, by the way. That's a big piece of news they have. Got a new CEO. Hopefully that works out for them. But let's go check out some bull and bear cases from our community. So PayPal. All right, 5-year bull case. PayPal stablecoin becomes popular and plays a role in new upcoming crypto bull market. Maybe so. Bear case. PayPal stablecoin is a dud. All right. New management team CEO give the stock credibility again and cause PE multiple expansion. Buybacks continue. Braintree becomes quiet success. $10 earnings per share. 25 PE. He has a terminal value of $200 per share. All right. And the thing I like that Siha Tahan did, he shared his stock analyzer in here. So if you're part of our community, and more on that later, you can go check that out. Alexander, bull case. People are starting to use more digital payment instead of paying with cash. That's been a case. And they also own Venmo, which is very, very big. And Phil Nye, I use Venmo as a pseudo ATM. 100% agreed. ScaleX, trust and secure transaction, agree. Easy to set up on any website, agree. Payment services such as Bill, like I just love a Khan Academy. Tim, you love Khan Academy, right? Love Khan Academy. I donate to Khan Academy. And today I just set up, I was doing a monthly donation. And I was like, this monthly donation stuff sucks. I canceled it and put a yearly donation. And now through PayPal, every year, PayPal is just going to go, boop, there you go. Boom, just like that. And PayPal makes it easy. I can go log into PayPal. It'll tell me all my recurring payments. And if I want to cancel them, boom, click cancel right there. I love it. I don't have that with Apple Pay. People are like, oh, Apple Pay. I'm like, it's a totally different service. So that's what I love about PayPal. Signed up with Uber to accept payment, well-positioned brand. PayPal and KKR announced multi-year relationship for European for pay later. Okay, don't pay dividends, which I like. Look at this, guys. Look at this. I'm so proud of ScaleX. Look what he wrote. Bull case, don't pay a dividend. I love it. You know why I love it? Because I'm on Twitter, and I love being on Twitter. But these dividend people on Twitter sometimes get a little overwhelming, and I like a lot of them. There's one guy that I really love a lot, but there's a lot of these guys who literally say, oh, I don't just invest for a dividend. Yes, you do. But paying a dividend isn't always a good thing. And I think with PayPal, I agree. Spend the money growing your business. Don't give it out to investors yet. Grow your business. Buying back shares and paying dividends are in specific situations. And to me, dividends are the last thing that companies should do. When they have no other good use for their cash, then pay a dividend. ScaleX, I'm giving you a free t-shirt just for that comment. I love it. Let's pull up the free t-shirts for him. Email help@everythingmoney.com. Let us know. All right, bear case. Low growth economy. Okay. I think it's going to help them because as international growth continues, I think PayPal is going to be a good recipient of that. Inflation reduced acquisition of customers. So customers reduce unnecessary costs, low sales. Okay. Low benefit for foreign exchange rates, cyber attacks. That is a valid concern. Competitor like Apple. I do think Apple Pay is a competitor. I don't think it's as much about Google Pay or Apple Pay. I think he meant Apple Pay here, not PayPal Pay. I think that's what he meant here. All right, Mario, agree on everything but the competition of PayPal. I still don't understand why Apple... I agree with you. Mario, I 100% agree with you. I don't think Apple and Google Pay are competitors to PayPal. I think they're just a facilitator of transactions. PayPal is a facilitator and a way of feeling comfortable about your transaction. Like if I pay through Apple Pay on my Visa and I have an issue, I go to Visa, I don't go to Apple. But with PayPal, I can do either one. That's what I love. Oh, interesting. Wow. I love these comments. I'm gonna do all this. Great stuff. Okay. Wicked Willie, which is Dalton, our in-house analyst, 2 bull cases. PayPal is accepted by 79% of the top 1,500 US and EU retailers versus 15% for Amazon Pay and 28% for Apple Pay. But again, I don't view these as the same thing, even on Apple Pay, even on Amazon Pay. WooCommerce adoption of PayPal complete payments has led to a 40% increase in checkout conversions and a 10% increase in pay later. Guys, 40% increase in checkout conversions is huge. Huge. Wow. Bear case. I don't know what take rate declined 11 bips year over year at just 1.74. Oh, how much they get as part of every transaction? Okay. Another bear case, not much skin in the game as the entire board executives own less than 1% of the public vote. That's a valid concern. So are they really going to be doing the things that are necessary to grow the business? In 2022, its estimated user churn was 40 million, and there's some sentiment that this should stabilize in 2023. So that's 10% user churn. That's not good. Let's see what else we got. Anything else to jump out at? Ali value, I agree. They're inflation resistant. All they do is they take a piece of all the action. If inflation's up, they're taking a piece of the higher action. If inflation's down, they take a piece of that. PayPal is universal on all mobile, non-mobile OS. As merchant, you can integrate it along with its capability to create a billing system. Agreed. Oh yeah. Oh, D-Money also shared too. Oh my gosh. So much interaction here. Guys, great. Thanks guys. Thank you everybody for interacting on the PayPal bull and bear cases. These are awesome. I'm actually going to write that. Guys, these are awesome. I am doing the video now. All right. So we did the 8 pillars. Let's see what the analysts are saying about PayPal. They're expecting them to make $5 a share this year, going to $9.22 in the next 4 years. That's a big jump, guys. Look at these growth rates. All double digit. Big growth rates on earnings per share. What about revenue? 30 billion to 45 billion, but I will note it's a big jump between years 3 and 4. I'd be skeptical of that. Why all of a sudden the big jump? But before then, it's high single digit revenue growth, but with such a high gross margin of 48%, that's what helps lead the earnings per share growth big time, because they could probably double their transactions and not have to increase much in terms of overhead. That's what I love about the business. All right. So we've done a lot here. Now we have to do the question of what's the right price to pay for PayPal. Now, obviously, guys, if you've seen our videos before, we've talked about the community a lot. We talked about the software a lot, and you probably wondered a little bit about it. So here it is. Now, I am not asking you to make a decision today, yes or no. That is not what I'm going for. What I'm asking you to do is to make an informed decision. And you can't possibly make an informed decision on the outside. You've got to be on the inside. You've got to be in here using the community and the software in order to make an informed decision. Just like you wouldn't go buy a car without doing a 15-minute test drive. I would never ask you now to do this without a test drive. So what I'm offering you is a 7-day free full access test drive of the software. That's what I'm asking you to do. If you go use that and use the tools, I'm very confident at the end of the 7 days, you'll see the benefit that you'll have for decades to come by using our community and using our software. And if you don't, and at the end of 7 days, it's not for you, no offense taken, move on, keep watching our videos, you'll learn a ton, and maybe down the road, it'll make more sense for you. But right now, all I'm asking you to do, go to everythingmoney.com. All you need is your email address. Sign up for our 7-day full access free trial, full test drive, give it a shot. I'm very confident it'll help change the way in which you view money. All right, guys, so let's look at PayPal. Now, I'm going to pull up PayPal from my history because I do it a lot because I own the stock. And again, don't buy it just as I do, but I did it about 20 days ago. So here are my assumptions on the 10-year analysis for PayPal. I did for revenue growth, low, middle, and high, I did 4, 8, and 12% revenue growth. Guys, they're going to grow. I think they're going to grow 4%, and I think 12% is possible, but 8% nominal growth rate plus some extra growth in the world economy makes sense to me, okay? Now, is it going to be a straight line up? Probably not. But if you looked at a revenue growth, they were looking at about high single digits. So I sat there and put a low side and a high side. Now, profit margin. Increasing profit margin over the last 10 years, 13.6 to 14.3. And so I put in 12.5, 16.5, and 20.5. Now, the reason I went higher here, that high gross margin, as they increase revenue, will drive a lot of pre-tax income to the bottom line. So that's why I think they can get higher. Plus, look at their free cash flow, much higher over the last 5 and 10 years. Now, last year was a drop. That could be a fluke, but I look at 10-year numbers going significantly higher free cash flow than profit margin. So I put in a higher number. And for free cash flow margin, I put 16, 20, and 24. All right? So feel pretty good about those. Now, for PE and price to free cash flow, they're currently selling for about 16 or 17 times. What's that going to be in 10 years? What PE do I want to assign to the company 10 years from now? That's the question we're asking. I always tell people start at 15 because that's the market average. Go higher for good moat, high ROIC and good growth, and go lower for the opposite. Okay? So here, I put 14, 17, and 20. Same with price to free cash flow because there is some competition. I could actually understand even doing 13 here on the low side. Because if their revenue growth isn't good, are they falling to the side because of competitors? That's a good question. In fact, I'm going to do that right here. I'm going to go 13, 16, and 19. I'm going to go a little more conservative. Now, my final 9, desired annual return. What's the return I want to own this business? I can get a 9 or 10% return from investing in a long-term ETF. And it all depends on what I think of PayPal. More and more risk, less and less risk. I'm going to adjust my desired return based on that. Now, I beat up the company down here, I feel. So I'm okay if I only make an 11% return and they do poorly. But as my assumptions get higher and higher, I need a higher desired return. This is my margin of safety. So I put 11, 13, and 15. Now, I did decrease my PE. So I could understand doing 11, 12.5, and 14 maybe. But I'm going to stick to 11, 13, and 15. I'm gonna hit the analyze button. Guys, I got just 1 more minute left in this video and I wanna explain these numbers so you can understand them better. So just stick with me 1 minute longer. Hit the analyze button, boom. I got a low price of 43 to 55, a high price of 118 to 138, and a middle price of 74 to 90. Now, if I pay today's price of 58 bucks and the lowest assumptions occur, I'm gonna make about a 10% return on my cash flow. If the middle assumptions occur, I'm gonna make about a 20% return, and my high assumptions occur, 29%. Guys, if this sounds interesting to you, which to me it does, you need to do more research on this company. Come in the community, sign up for our 7-day free trial at everythingmoney.com. Thank you very much for your time.